All right, welcome, guys. It is Thursday evening, August 21st, in preparation for Friday, August 22nd, the end of the week here. So we're continuing on with Roy Longstreet's viewpoints of a commodity trader, and his next chapter is Out of Control. We'll go over that before we jump into. Um, uh, Hang on, let me get this out of here if I can. There we go. Before we jump into the market analysis for the day. So on Out of Control, the chapter here. Have you seen teenagers weaving in and out of traffic as if they own the road? How many of our traffic facilities are due, or traffic fatalities, sorry, are due to adults acting like teenagers? It is true in trading too. I know of men today who are taking dangerous chances with their money and, more important, unwarranted risks with their self-control, self-confidence. They are running at the risk. They are running the risk of losing valuable assets, which include poise, ability to think clearly, and ability to make good judgments. In several cases, men are becoming irresponsible addicts to the evil of speculation. They think that they must risk everything they have on each and every move. In other cases, brokers are finding uncertain trades to keep to keep their clients' money working, and I'm sure to keep the commissions rolling in. The most pitiful trading in this fascinating, profitable activity of commodity trading is the might have been, the powerful man who had everything, but who refuses to yield to controls, like what might have been. He did as he pleased. His capital and ability were dissipated. The man who goes to the top as a commodity trader does not do as he pleases. Instead, he submits to controls, to discipline. He brings his desire into line with channeling his resources and strength into the trade that have the high potential and a high degree of certainty. He has trained himself to choose correctly between the two freedoms, the freedom to do as he pleases and the freedom to do what he must do. I have a side note here. To be free, we must submit to control. The stronger the man, the more necessary the controls. All right. Yeah, so that was good. Jacob, I thought of you today on that. Just controlling those things are in your control, rather than just going on tilt. I thought that was great. So next chapter here. Do you lie to yourself? Your trading capital is your seed. It is one of the two tools vital to success in commodity trading, the other being your ability to think. It is important when considering your capital that you know at all times exactly what your capital position is. One of the most important decisions you will make in commodity trading is how to manage your seed. It is vital that you recognize that you are engaged in a program that is of major importance to you. When you take this attitude, you can start to build a program in keeping with your resources, your temperament, and your knowledge. I have seen too many strong men, successful in other businesses, wake up in a panic when they have lost too much money for their temperament. They have planned to put up more when and if it ever happened. But when it did happen, they suddenly became aware of the fact that they could not take it. Far too many traders, particularly the amateurs, hide their heads in the sand when adversity comes and hope that the paper losses will go away and somehow be replaced by paper profits. Or they suddenly decide that should they lose their seed, they will add additional capital from some other source to the trading venture. It is very easy in time of adversity to assume the role of the hero and to take it on and take it on the chin. All of those procedures are fatal to success. That is no way to run a business. Successful commodity trading is a business. The most successful traders, the most successful traders I know always take money out of the markets. They never put any more money into the market. The people who look upon their capital as something that they can lose in commodity trading are taking the view that success is a matter of good luck and that good luck that will someday run out. These people lose money. The successful traders live by rules that they know will guarantee success if they are followed. For purposes of keeping daily score, it is recommended that you add each day the profits in open trades to and subtract the losses in open trades from your cash balance. In this way, you will not lie to yourself as to how much capital you have for trading purposes. The biggest fool in commodity trading is the man who lies to himself. All right. The next one is know the score. And this is the last chapter we're going to go through here on knowing the score. In trading, one must be constantly alert to protect your resources. This represents the defensive phase of trading. A good defense is basic to success. Here are a few simple calculations that are recommended for those who wish to build a good defense. It is urged that you keep score on each item daily. Defensive information. Number 1, available capital. Number 2, margins, requirement for the day. Number 3, your gross power. Number 4, net power. Number 5, calculated risk in open trades. 6, percent of capital risks. That's I know a lot of people out there recommend 1 to 2%, no more than 2 to 3% at most. And then as accounts grow, a lot of traders reduce it down to 1% or less that they're risking at any one time. Pardon me. Calculating the above items will give you the information necessary for survival. It will help you to keep from losing your capital. But knowing how to keep from losing your money is no guarantee of knowledge about making money. To make profits, you must appraise the opportunities. Like a good farmer, you must seek out the most fertile soil and plant your seed when the weather is favorable. This is the offensive phase of trading. Offensive information. What is your potential profit? Number 2, what is your potential loss? Number 3, what is your margin required? Number 4, profit and loss ratio. Number 5, profit margin ratio. Number 6, degree of certainty or the type of trade. The calculations of these 12 items daily will permit you to do the one thing that will make commodity trading both meaningful and profitable. It will make it possible for you to choose between the action that you want to take and that which you must take. This is freedom in the truest sense. And this part here reminded me of Buddy today. When you doubled up on your position there, you adjusted your total losses. You had your defensive information in line to keep yourself defensive, and instead of exposing yourself to twice the amount of loss, you adjusted that when you scaled into that. So that was awesome. And awesome for you, Jacob, to know when to, implement your discipline and your rules there. So that will help all of us going forward. Keeping score, calculating risk, we'll get into that. Pardon me. The next video. All right. So for now, here on the daily, let me get this out of here. Okay. On the daily, we bounced off this 30 EMA. So this is my 30 EMA, the pink line here. Let me zoom out just a little bit here, give you guys the big picture again. On the daily, we've been, coming up. We bounce off the 30, bounce off the 30, came here, dipped a little below it. Here we bounced off it now twice in the last 2 days. We bounced off that 30 again here. So right now we got a little recoil off that, which ironically that was at that 63.70.25, and that's where we hit that negative 1,000 tick. So for now, I would anticipate us staying above that point. If we break below it, we could have temporary weakness. But then again, if we get back above it, then to see that strength where that buying came in on that. Also for now, we are holding this pocket here. So you can see this this pocket over here being held. Let's throw this up here. For now, we're kind of holding this pocket from that last spike down that happened on what was it, beginning of August? Yep, beginning of August here. We dropped off and then we came back up for that last wave 6. Again, long term or overall, I don't anticipate us to continue to hold this and continue to go up for now. That's just kind of my, if I were to project out for the next couple of weeks. But I don't expect that to unfold in a straight downtrend either, you know. So we'll just kind of keep an eye on that. Basically, you know, we had a little doji here. I think we opened and closed on the exact same. We opened at 67, closed at 67. Yeah. So basically, we've had 5 days down. My signal tomorrow is actually signal for a buy day, and that's based on this 2-period rate of change. My 2-period rate of change actually we flipped up. So yesterday we were at negative 0.81. Today we're at -0.69. So it's a flip up in that 2-period rate of change, even though we still closed down. We closed red on the candle there. So we had the 2-period rate of change flip up, indicating a possible signal for a buy day tomorrow. If tomorrow is green, you know, then that could set up the short the first green, you know, after these five days down in red. That could set up that short the first green. Yep, cover the two-period rate of change there. So let me look at the 65,000 tick chart. Let me pull that over here. All right, so on the 65,000 tick chart, you see we have a little bit of this. I don't like do this here. Pull this to the middle. So we had a little bit of bullish nature here on the fast line as we came, you know, made this lower low. So we made the first low earlier this morning around 9:47. Then we made one more low around the 2 o'clock time zone. And that was that -1,000 tick. And then we kind of bounced from there. Well, that new low was on this little bit of bullish divergence. So we want to respect that. Also on the 60-minute chart, we basically got that same picture here. Again, you know, this is the 60-minute chart. It looks a little more aggressive on that, but that same picture on the 60-minute playing out there. So we want to be aware of those things, and that back where it goes. Okay. And then on the internals, I don't have much on the internals, on the VIX rather. However, you can see that if we were to, let me expand this out here. So this is that daily channel we've been, you know, kind of in, moving up in this channel. And, sorry. Okay. So you can see we've made this move down here. We're pretty close to the bottom of this this channel here. So you know, if we were to open down, you know, then that may be closer to this lower channel, and that would give additional strength to the buy idea on that 2-period rate of change. So you know, that would give additional strength to that. Now, obviously, if we open up, you know, or even anywhere close in here, we could still set up a buy day. So, you know, keep in mind, we're coming down towards closer to the bottom of this channel here. Could set up that buy opportunity bounce. So I'm looking at that on the SPY. Keep an eye on that. Well, guys, that's basically it. That's all I have for this evening on that. Great job to everybody. Wanted to congratulate everybody. Even those who had a down day today because you implemented the proper discipline in your trading, and that discipline will be replaced by a process. And that process, as you continue to refine and develop that process will make you profitable. I guarantee it. I know it. I feel it in my bones. But all right, guys, good job today, and we will see you in the chat room tomorrow. All right, thanks.